So, good evening, everyone. Good morning, good afternoon, depending on the time you're going to be watching this video. It's SM right here, and I'm going to be your host, your friend, your brother, your tutor, everything that represents love and unity for today. Alright, so basically, I said I was going to do a video on confirmation entries. Confirmation entries. I use confirmation entry a lot, and I also take aggressive entries like going in aggressively. So basically, I used to see something that first of all, it's not just about trading. That's not just it. Alright, so there's something we call, I just want to run you through something a little before we start. So there's something we call expectation and execution. See, study shows that one of the skills that we trader lacks a lot is patience, and because we lack patience, we most time act out of emotions. And most of the time, people says that we used to make words like "don't use emotion while trading," which is practically impossible because we are human. You can't see, if you know what I'm talking about. So there's what we call the expectation and the execution. So for example, we are just trying to say that your expectation is you trying to say, okay, I want to see price do something like this. I want to see price do ABC so that I can do XYZ. So basically, I want to see price either I want to see a break of structure, create an inducement, come back to a particular key level. Then before I take action or before I wait for my confirmation, so meaning that if I don't see my expectation, if what I'm waiting for, if it doesn't present itself, then there's no trade for me. Are you getting what I'm saying? Your ability to know that, okay, let's just rest for today. There's this saying that the fact that you are a day trader doesn't mean you should trade every day, which I think is very correct. Yeah, there are sometimes you just need to sit back and watch what price is doing. So that's it. So secondly, I used to see something that when it comes to trading, your storyline first. Your first job as a trader, if you watch the previous video I did before, I said something that your first job as a trader is to first of all understand storyline. Understand this storyline in the sense that understand the direction of where price is going to. Knowing where price is coming from and where price is going to is very important for you as a trader, so that everything you are going to be doing, you should trade in line with that direction. And secondly, you should understand entry models. So, and basically, you know what I trade. I trade S.L.K, meaning I'm looking for liquidity close to a key level, subjecting it to structure in line with the market direction. Alright, so basically, there's a scenario I used to explain it that your storyline, which is your first background, your foundation, it is the foundation. So I need to know where price is going to so that I can know the direction in which I'll be trading to. I can know structure because there are sometimes that we have major structure and minor structure. So I can understand structure and still fee if I don't know the direction of where price is going to, right? So a storyline gives you a clue of where you're going to. Let's say I'm traveling from here to America. I should know that America is where I'm going to. That's my destination. If I don't have a destination, there's no need of me traveling. Are you getting what I'm saying? So your storyline gives you your destination. It gives you where you're coming from and gives you your destination. Sorry for the cut. Alright, so your storyline gives you a clue of where you are going to. So if I'm going to, let's say I'm traveling to America, I already know that my destination is in America. So everything I'm trying to do and what I'm going to do should lead me to my destination. Alright, so storyline gives you where you are coming from and your destination. So structure now, based on my entry model, like the strategy that I trade, structure, liquidity, and key level. So there's a way I explain it. I'll say that liquidity is the money. See, I can't just knowing that I'm going to America alone doesn't take me to America. You get what I'm saying? Doesn't take me to where I'm going to. Forget about America now, it doesn't take me to my destination. All right, so I need money for transport, for flights, for tickets, and all those things. So more, if we say liquidity is money, then I need money. So money represents the liquidity. Then key level is like the flight. Are you getting what I'm saying? I'm expecting price to come to a particular key level to push it in a direction I'm going to. All right, so key level is like the flight. It's like the airplane that take me to where I'm going to, that will take me to my destination. Why structure is the roadmap. Are you getting what I'm saying too? It's the roadmap. Tell you, okay, we are going to land at this particular airport before we move again. Are you getting what I'm saying? Just like that. So that's just basically how I used to explain it. So I don't want this video to be very long. So with everything that I said we start with with key, the storyline first, direction. So this is USD CHF right here on the monthly time frame. I like to go to on the weekly time frame. Let me check monthly. Alright, so this is what monthly did. See, I don't want to go far. That's the thing. I don't want to go far because the monthly candle have not closed. This particular monthly candle have not closed. At least it's still remaining 70 Bs. But let's just still go with what we are seeing here. So first of all, if you watch the previous video that I did, I explained 2 ways to find your bias. 2 ways. I think you should go and watch it. It's on YouTube. I'll probably drop the link with this video when I'm dropping it. Alright, so we just click the link and look for the video and watch it. Alright, so first of all, price has come into an A-shaped key level. An A-shaped key level is used to sponsor sell, but it is proving otherwise, right? So I talked about another way of building your bias. We build your bias with 2 ways. You use key levels to build your bias, and you use the one candle formation to build your bias. So 2 of them are representing here. So don't forget that this multi candle have not closed, so we can't really go with this, but we are just taking advantage of the small move that we have. Alright, so you can see that price has come into an A-shaped key level 1. It gave us a key level type of way of building bias 1, and secondly, it gave us the second type, sweep of liquidity, sweep the last monthly high, rejected, but we have a problem. The candle have not closed, and because the candle have not closed, we can't make decision. Are you getting what I'm saying? So if this candle would have closed here, what I will be expecting the next monthly candle to do is just back into this A-shaped key level, and then we set to take out this particular low. Are you getting what I'm saying? Sweep the internal liquidity, we had to take out the external liquidity. So price just moves basically in cycles. Sweep internal, take external, internal to take external, external to take internal again. So that's basically just what's here. So then we go to the weekly time frame. This is where I mainly want to build my bias from. Yeah, this is it. As of last week, price was here. Price reacted from this V-shaped key level that was disrespected. Why is it called V-shape? If you go to the line chart, you will see it looks like a V. You get what I'm saying? It looks like a V. Alright, so that's why it is called a V-shape key level. So don't forget, I'm trying to teach confirmation entry. I'm not here to teach about key levels and all this kind of stuff. Alright, so price was rejecting from there. Price didn't just rejected, it closed below, and closing below, it gave us a sweep of this previous weekly high. Are you getting what I'm saying? A sweep of the previous weekly high. That was it. Price swept the high. Majorly, we expect, ideally, not just majorly, we expect that this low should go. Alright, so but one thing about me is that I like to target like key level to key level most of the time, because looking at this, I'm building this bias from a key level and I want it to head on the opposite key level, which is this particular key level right here. This one, this A-shaped key level. A-shaped key level. This particular A-shaped key level. So let's see go what we are saying. So price swept this previous monthly high. We expect the low to go. This is how it should be. The low should go. You hear what I'm saying? The low should go. Alright, so in a scenario like this, so when price is coming back, we expect price back into the A-shaped key level that price created. Like after the sweep, price create an A-shaped key level, we expect price back to that A-shaped key level so that we can sell to take out this particular low. Alright, so that's it. So in a scenario like this, I'll go to the daily time frame. If you watch the video, I don't need to explain in details, because if you watch the video, you are gonna see everything I'm just talking about perfectly there. Alright, so I'm not a swing trader. One, see, I'm not a swing trader. A swing trader, I don't think though, they wait for confirmation. Actually, see, let's use this as an example. Price already came into a key level like this, drop our time frame lower. I want to see price give us something like this in our entry. It doesn't happen most of the time, but I just want to teach this particular one, and maybe next time I'll talk about an next one. You get what I'm saying? Or another one. So I want price to give me a formation like this. Let's say this is the key level. Then I want price to do something like this. Let's say create a candle like this. Let me draw this thing so that you can see what I'm doing. Create a candle like this. That's the wick of the candle, right? And then have another candle like this, and the wick sweep the previous candle. You get what I'm saying? That the first thing I want price to do when it approach my point of interest. It can happen before it approach it or after. You get what I'm saying? So here will now be my sweep. Price swept this previous candle high. I expect this low to go, right? I expect this low to go. So whilst price was doing that, price created an A-shaped key level here, an A-shaped key level here. Price created an A-shaped key level there. So what I'm basically just expecting price to do is just to come into this A-shaped key level, and then I'll say, so something like this is what I'm just expecting price to do. Alright, so look at what happened here on the monthly time or the weekly time frame or the daily time frame. Sorry, what can you see? Why price was approaching this key level, it swept this high, came into this key level, then closed below it. Don't forget, candle closure is very important. It closed below it. Are you getting what I'm saying? I said something that we expect this low to go. Alright, so we already know the direction of where price is going to from the monthly, weekly time frame. That is why this particular bearish move is still going down. We know where the target is. Alright, so basically, if I don't know where the target is, this is where my target would have just been. Okay, let me just take it. Let me do something like this. Alright, so sweep the high, we expect the low to go. And I said something that price creates an A-shaped key level very close, like very close. Are you getting what I'm saying? Let me make it clear. Let me go to the line chart so you can see it. An A-shaped key level. So what are you expected to do? You take a sell from there. You take a sell from that zone. Your stop loss will just be above the high of the candle. Sorry, let me turn it to line chart. Okay, candle chart again. So this is it basically. Take a trade from this zone, targeting the low. You get what I'm saying? Targeting the low, your stop loss will just be above this candle, and you just win yourself a trade like this. But because we are not swing traders, we can't do something like this. You get what I'm saying? We can't do something like this. So in a scenario like this, see, it can happen like this on the 4 hour, on the daily time frame. Then you look for your confirmation on the 4 hours. It can happen like this on the 4 hours. You look for your confirmation on the 2 hours. Are you getting what I'm saying? Your confirmation is basically this candle formation that I explained. So let's go a little lower to the 4 hours. Let's see if we'll see something like that. Don't forget that we could have already take our trade from this time frame. Then look at the 4 hours time frame. The 4 hours time frame give us the same thing. You can see a sweep and it closed below. Price swept this liquidity, then came and closed below. I told you that price will create an A-shaped key level. Price creates an A-shaped key level. Your entry should be from the A-shaped key level, just like this. All right, so let me remove all these things. Don't forget that we are coming from, we already know our bias. That's why we are doing this. All right, so your entry should just be around here. Stop loss, and then targeting the low. You get what I'm saying? But based on we know where the price is going to, I can target here because I am sure that is where price is going to. And then you can see 1:22 risk to reward. So confirmation entry gives you it gives you lower risks, not just lower risk, and also high risk to reward. You get what I'm saying? All right, so just be going like that. You can be seeing it. All right, so let's check the 2 hours. 2 hours. 2 hours basically did the same thing again and again. It did the same thing. This was the sweep. Price closed below. Although the wick of this candle is long. You get what I'm saying? The wick is long, extremely long. So close below. Taking your trade from here, your stop loss has to be something around here. And then your target will just be this. Although a lot of people can still take this kind of trade. A lot of people can take this kind of trade. This is like a 1:9 risk to reward. You get what I'm saying? That's still good. That's okay. Alright, so just continue. Don't forget that price has to first of all come into your key level first, react. Then before looking for this confirmation. You get what I'm saying? See, your 2 hours time frame should be your friend. Should be your friend. You get what I'm saying? Should be your friend. It's not something you joke with. It's not something you joke with. If you look at what happened here, the same thing still happened. Okay, let me see. I want to try and remove this. Let me remove this tool. Just look internally. Look here. Look at what happened here. Price, first of all, price came into a key level. Price came into a key level. Before it came into a key level, it swept this candle's high. Then tap into the key level and closed below the key level. And I told you something. I said it will create an A-shaped key level. That is if we are selling. Are you getting what I'm saying? If it's in a bearish market, to create an A-shaped key level. If it's a bullish market, to create a V-shaped key level. So created an A-shaped key level there. Go to the line chart. You can see it's an A-shaped key level there. And I said you wait for price to come back into the A-shaped key level, and from the A-shaped key level you sell. Okay, I don't know how to place this thing. Don't forget that this trade will not get its stop loss. So just something like this, and then where will you target? You target the low of the candle. you target the low of the candle. Alright, so you can go to your lower time frame to look for more confirmation, but let me show you another one. So price was still bearish. We know that we are still bearish. Price gave us a breakout. Using this as liquidity, price came into another key level right here again. So just like that, we just know that we are bearish. We are still bearish. And what the price did, price engineered great inducement here, came back and swept the inducement, and price came back here and sold off just like that. Price came in and sold up. Then there was this entry. Look at this one. Look at this particular one. Price came into this QM arrow, an A-shaped key level that was disrespected 2 times. Look at it. Yeah, that's it. Let me remove these other ones. Came in, and when price came in, it didn't just came in. It swept this high. Sweeping that high, we expect the low to go, but don't forget that we know the direction of price and we are taking price downward. So my target can be down, alright, but swept this high, then it created an A-shaped key level. I told you something. I said the A-shaped key level will be your entry. Are you getting what I'm saying? The A-shaped key level should be your entry. And what did price do? Price just came back to that A-shaped key level. Look at it here. Let me go to the line chart. You can see that A-shaped key level. Price just came back there and sold up. Just sold off. Crazily sell. Like this. Stop loss just a little above the high, like this, and then profit at the weekly opposite key level, something like this. Crazy stuff, just like that. So just your ability to just train your eyes to see it. You get what I'm saying? Anticipate it, wait for it. Like, don't just predict, anticipate and then react. So that's one of the things that makes you a great trader. Alright, so let me go to the 1 hour time frame. Let's see if it happens more. Don't forget the rule is that the price needs to come into this. You need to come into a key level. If you look at where price is even currently reacting from, is doing the same thing on the 1 hour time frame. See, price came into a key level. Price swept this low. Are you seeing? Price swept this low, then close below. Let me draw this key level down. This was the weekly opposite key level that we spoke about. Then swept this low and close above. I told you something. I said you are waiting for price to come to the V-shaped key level, because this one is for buys. You are waiting for price to come into the V-shaped key level, and go to the line chart. You will see it. It's a V-shaped key level. Then you are taking your long from the V-shaped key level. Your stop loss will just be above the high of the candle, and then targeting the high of that candle. Simple stuff. Can you see? Just like this shape, something like this. This is like a 5.8 raised to reward. 5.8 raised to reward. So that's basically just it. Alright, so that's just it for confirmation entry. If you go to the 30 minutes, you see how it looks there. See how it looks. It's just like price. Let me use the line chart. Price came into the key level. Price coming into the key level went up just like this. If you go to the 15 minutes now, you will see it very clear. It will give you a breakout. Yeah, exactly what I'm saying. Price came, broke out, a breakout from here, confirming bullishness, created liquidity inducement close to the level like this, and then what the price did, price came back into the key level. Don't forget, we know where this key level is coming from, or price came into this QMR. On the 15 minutes is a QMR, so you can easily just adjust. Are you getting what I'm saying? You can adjust your entry here. This entry, this particular one, okay, you can just adjust your entry here, then your stop loss will not be like this. And the same thing, you can see this entry is now giving us a 13 risk to reward. Alright, so that's basically it. I'll be dropping more videos on different things. We'll be talking about different things a lot, so I'll be dropping more videos, and I'll still be trying to emphasize more on confirmation entry. We'll speak about key level. Maybe my next video I'm going to talk about key levels personally, like just the few video will just be about key levels, how to spot them and how to know which one to use at a specific time. Alright, so stuff like that. So but for me, basically, I won't take this trade. Are you getting me? Because I'm still bearish. So I'm just trying to give you a confirmation entry though. So have a nice day.